Welcome back. This is Corporate Radar, and you're tuned in to CNBC-TV18. Well, Shree Cement, the stock is under pressure a little bit. The numbers are a little bit mixed. Remember, they have been focusing on value over volume strategy, and that's what's hurt the volume growth. But what's the strategy from here on, and what's the outlook for the industry? We have with us Mr. H.M. Bangur, the chairman of Shree Cement. Good morning, Mr. Bangur. Always good to see you in, sir. The last quarter, yet again, the strategy was same, going for value over volume. Tell us what's the strategy from here on, though. What kind of volume growth are you estimating for Q4? And what would that mean in terms of the yearly growth? And for FY27, what growth can we look at, sir? Volume growth. Let's go ahead.
Right. So first of all, that strategy which we are following for last 8 to 9 months, that is almost through and it has been successfully done. This quarter, we will be getting both value and volume. Now volumes have started coming, and value which we had to sacrifice volume for last 3 quarters, that sacrifice part is over. Initially, public and the dealers didn't expect that this can be sustainable. We were under pressure. But this quarter, for the first 1.5 months, up to 10th February, in February, our volumes are definitely better than last year, same quarter. And as it is a commodity, we don't know what will happen tomorrow. I will say a very modest 5 to 8% jump in volume with good jump in prices.
Okay, all right. So 5 to 8% volume growth is what you're guiding for in Q4 on a year-on-year basis. We got that. So by the end of this year, you'll end closer to around something in the vicinity of around 36 to around 36.5 million tons. Will that be a fair estimate?
Yes, that will be a 37 or so. 36.5 to 37 will be the estimate.
36.5 to 37. That means you're gunning for a good volume growth of around 5 to 8%. Got that, sir. What about prices? Maximum exposure you have in North, followed by East and then South. What has been the price change on an average for Q4 if we compare it to Q3? Because I understand that price increases have now been absorbed. They've been accepted.
Yes, we try price increase multiple times. Sometimes it gets absorbed, but about 10 to 15 rupees price. In terms of percentage, it will be 4 to 5%, but 10 to 15 rupees is a good price rise.
Okay, that's encouraging. So, besides the volume growth being a bit of a disappointment, what's encouraging is you have managed to bridge that price gap with, say, UltraTech Cement. Earlier, the price gap was around 30 rupees. I think that's come down to around 15 rupees. So you're satisfied on that front now? And could you tell us, I'm observing that non-trade as a percentage of a mix had moved up. Do you believe that that reduces again and you focus again on trade?
The prices are different, but in trade, so much margins and so much distribution cost is there. So in non-trade, the EBITDA almost is the same. So trade or non-trade hardly makes a difference. Now 30 rupees to 15 rupees is the fair estimate. This has come down. And now, as I was saying in the very first opening line, the volumes are also coming back. So now we will be having the best of both worlds.
And the best of both worlds means in Q4, you get back to around 1,200, 1,250 rupees per ton of EBITDA. Would that be a fair estimate?
That in a commodity, I never given the price.
Mr. Bangur, why I'm asking you about that is, see, prices have gone up by around 3 to 4%. Volume growth is going to come back, so you'll have operating leverage. You'll also have pricing benefit and input cost. You're focused a lot out there. So give and take everything, 150 rupees to around 200 rupee price improvement in Q4 could be par for the course?
Yes, of course, this will be about 150 to 200 rupees will be the price growth. And 1,200 rupees EBITDA is not far off.
Okay, got it. All right, sir. I want to ask you about the profitability, sir. Because in North, you have been king with regard to market share and the way you're focused on cost as well. First, could you tell us what is the EBITDA per ton difference if I compare the North as well as South? What could it be? North would be relatively much higher.
Relatively about 500 rupees higher.
500 rupees higher in comparison to South, right?
Right.
All right. Now, the problem is that in North India, you'll have a few more players that are coming there. JSW Cement has shown some aggression. UltraTech, they are adding capacity there. JK Cement as well. as well as Wonder Cement. So there is a problem because the street believes that your dominance in North India is going to be challenged. What do you have to say to that?
Yes, dominance in North India will be definitely challenged. Right now, if you have 20% market share, it will come down to 16%. So that is all right. But the point is, our volumes will increase. The demand is much more. India, when it was growing at 7%, at say 30 million ton in North India, now it is growing at 7% at 100 million ton in North India. So every year demand will be increasing by 7 million ton. So few 4 million, 5 million ton production is not going to matter much.
You believe everyone will prosper?
Yeah, we will also prosper.
What do you have to say about Ultratech Cement talking up the South industry? They are saying South is the new North. And we know that North has been doing far better in the last few years. Do you think it's vested interest because now they have a higher exposure to South India? That's why they're talking about the South Indian market. Or do you believe indeed the South is doing much better?
Right now, only about a minute back, I had said North Indian profits are 500 rupees better.
Yes.
And future, nobody knows that how it will turn out tomorrow. Yes, it may be possible, may not be possible, but we have to see. We don't say as it is.
Okay, Mr. Bangur, you'll have to do something to excite the street, but because the street suddenly feels that Shree Cement has lost its flair. You're sitting on a good amount of cash, and in the past you have said you want to grow organically. So we take that. But with this cash that you have in the books, do you think you can give a higher dividend? If yes, dividend payout ratio, how much does it go up by? Or do you think you could also look to squeeze in a buyback?
No, buyback will not be there. The buyback, we will increase the dividend a little. And the fourth quarter things will be exciting. The numbers will excite. We don't have to keep exciting every quarter, every analyst. But this quarter will be good. That's all I can say.
Okay. All right. We take that point, sir. Final question, FY27. You have done with that pricing gap that you have narrowed with the leader. You're sounding far more optimistic in Q4. So volume growth for FY27, what would be your estimate?
This 26, we had grown less than the market.
Yes.
But 27, our growth will be higher than the average market growth. That's all I can say.
And the market you're expecting to grow at around 6 to 7%.
Yes, 7%. And as if the government's focus on infrastructure, which Prime Minister or in the budget it has come, so we think the market can grow still faster.
Oh.
So overall, about 10% can be Shree Cement growth story.
10% growth for the next year.
Subject to the market growing at 8%.
Got it, Mr. Bangur. Appreciate you joining in, giving us that outlook for the time being. The street is fixated on the lower volume growth, but you're saying the way ahead, there'll be a fine balance with regard to volume as well as volume growth, and in turn, it'll reflect in profitability. Good speaking to you as always. Wishing you all the best for the remainder of this quarter.